Hi, this is Dr. Liang Ding from School of International Trade and Economics, Jiangxi University of Finance and Economics. Today's lecture is for Chapter 5, China's Foreign Financial Policy. This chapter consists of 5 sessions. The first session is about the opening up of China's financial market. The second session is about the RMB internationalization. The third and fourth sessions are about indirect investment, inward and outward capital investment, respectively. In the fifth and final session of this chapter, we will talk about the financial cooperation. Financial industry is a special industry because it is heavily connected to all industries of the economy, making it extremely important to national economy. It is also one of the industries that are heavily regulated around the world due to potential financial risk. Financial regulation refers to the supervision of financial institutions and the financial market. Thereby, financial institutions and financial market activities are subject to certain restrictions in order to maintain stability and efficiency in the economy. The regulations including market access, the scope of business, market prices, for example, interest rates and exchange rate, risk control, capital usage, and cross-border capital flow. From this point of view, any deregulation, whether on domestic or international investors, can be seen as an opening up to the financial sector. At the beginning of China reform and opening up to the world in 1978, the primary task of China's financial reform was to establish a modern financial industry in China locally. Thus, the pace at which the financial industry has been opening up in that time was relatively slower than in other areas, especially in international trade. Due to risk concern, China's financial opening up progressed steadily, especially in the opening up of capital account. After China's accession to the World Trade Organization, it accelerated the process of opening up its financial sector. With the improvement of China's economic strength, the pace at which the Chinese enterprise have been going out also accelerated. The Chinese financial industry has entered the two-way opening up era, and the internationalization of RMB is speeding up. Therefore, China's financial market is ready to open up to the world in a new era. Here, let's review the history and achievement of China's financial market opening up. Over the past 4 decades, since China economic reform and opening up in 1978, and as an important part of China's overall reform and opening up, the opening up of the financial industry in the past 4 decades happened in 5 stages. The first stage started in 1978 to 1993. At this stage, China's foreign economic development has not been growing very fast. There was a shortage of capital, foreign exchange, and relatively cheap domestic resources. Due to this circumstance, China started the initial stage of opening up the financial industry to the outside world, mainly by introducing some foreign banks, participating in international financial market activities, attracting foreign exchange funds, and improving the domestic market investment and financial environment. The second stage started in 1994 to 2001. During this stage, foreign investment increased rapidly and the foreign banking business continued to develop. In 1994, the RMB exchange rate reform was launched, and China began to implement a managed floating exchange rate system. Subsequently, the State Council promulgated the regulations on the foreign financial institutions, marking the beginning of the legalization and standardization of the regulation of foreign banks in China. After 1998, under the influence of the Asia financial crisis, the development of foreign financial institutions in mainland China had a short period of structural adjustment. The third stage started in 2001 to 2006. At this stage, the opening up of China's financial industry underwent great changes. China joined the WTO in December 2001. China started to get more involved with global financial cooperation and competition. At the end of 2006, the total assets of foreign banks in China mainland reached 806 billion yuan. The fourth stage started in 2006 to 2016. In 2006, China's transition period for accession to the WTO ended, and it began to fulfill its commitment to further opening up its financial sector to the world. In 2006, marked by the promulgation of the detailed regulations on the financial banks, the geographical and customer restrictions on foreign banks in China have been reduced significantly. In 2008, due to the impact of global financial crisis, some foreign banks downsized or quit some of their operations in China. But in general, the development of foreign banks in China mainland have achieved considerable result in the past decade. At the end of 2016, the total assets of 1,013 banks from 14 countries in China were about 2.9 trillion yuan, 3.6 times higher than that in 2006. Now we are in the fifth stage. Since 2017, China's financial market entered a new stage of opening up to the outside world. At the Boao Forum in April 2017, President Xi announced that China would significantly relax market access barriers, including the financial sector. The governor of Central Bank, Yi Gang, announced 12 major reforms and the timetable to expand financial opening up. In 2019, many restrictions on market access, business scope, and holding share proportion have been relaxed gradually, and a number of policies have been introduced and implemented. New round of expansion on open-up policies are showing that China has chosen to continue open up its market after analyzing the current global economy and the political situation and the historical experience. Therefore, China will resolutely and orderly increase the opening up of financial market in the next step. This determination is solid. As President Xi Jinping have said, China's open doors will not be closed, and they will only get bigger and bigger. Next, let's look at the opening of different financial industry. First is the banking industry. Foreign banks entered the Chinese banking industry in two ways. One is through direct establishment of institutions, such as the establishment of the wholly foreign-owned banks, or establishment of branches. And the second way is through the establishment of the joint venture with Chinese partners. Prior to 2001, foreign banks had more restrictions on domestic business, mostly operating in the form of branches of foreign banks, and were basically unable to engage in RMB business. From 2001 to 2006, China accelerated its opening up, and after China's accession to the WTO, it fulfilled its commitments and gradually opened up restrictions on its RMB business, including raising the ceiling limits on foreign ownership in 2003. During this period, a large number of foreign investors also took stakes in local banks. After 2006, foreign banks' branches and Sino-foreign joint venture banks achieved national treatment, with the fair competition to the local banks. And since then, the policy focused on the details of further clarity and revision. By the end of 2017, foreign banks in China has total domestic assets of 3.24 trillion yuan, accounting for 1.29% of the total assets of the banking industry in China, equivalent to the level of a medium-sized domestic bank. Although the size of a foreign bank in China is still relatively small, the participation of foreign banks injected fresh blood to China's financial industry and promoted the competitiveness of the industry. Most foreign banks entered the Chinese market have strong financial strength, good reputation, advanced management experience, professional knowledge, and outstanding talents, which provide useful reference for the development of domestic banks. The competition made the local Chinese banks to examine their own shortcomings and speed up their reform and development. Overall, the opening up of the banking industry and the utilization of foreign capital have achieved remarkable results, while improving the overall level of competition in the industry. The risks brought by the opening up are generally manageable. For securities industry, the first joint venture brokerage firm in China's security industry was set up in 2003. From 2003 to 2012, more than a dozen joint venture brokerages have been set up. For various reasons, those brokerage firms have difficulty to compete in the domestic securities market. No joint brokerage, excluding Hong Kong-founded brokerages, have been approved for new establishment in the 7 years after 2011. In 2018, with the promulgation of the regulation for the foreign invested securities companies, the enthusiasm of foreign investment in China's securities market has been rekindled. In just over a year, 5 foreign-controlled brokerages have been established. On April 1st, 2020, China's Securities Regulation Commission lifted the restriction on ratio of foreign share of securities company, which means that the expansion of the securities industry to open up to the outside world is about to usher in a new chapter for insurance industry. In 1992, the insurance industry opened up to the outside world got into a pilot phase. The State Council selected Shanghai as China's first pilot city for insurance opening up to the outside world. AIA has been approved to set up a branch office in Shanghai to operate life insurance business and the property insurance business. This was the first foreign insurance institution in China after the reform and opening up in 1978, which also marked the opening up of China's insurance industry to the pilot stage. The first 3 years after China's accession to the WTO in 2001 were a transitional period for the Chinese insurance industry open up to the world. At this stage, the insurance industry expanded its depth and breadth of opening up to the outside world, and more cities were allowed to open up to the foreign insurance company. Since 2004, the insurance industry entered a semi-liberalized phase. At this stage, a series of opening up policies have been implemented, such as the removal of geographical restriction on the establishment of foreign-funded insurance institutions, allowing foreign life insurance companies to provide health insurance, pension annuity insurance business. China's opening up process of the insurance industry is similar to that of Japan and South Korea before they were fully opened up. The main feature is that foreign investors have the holding limits in terms of equity ratio. Right now, the insurance industry is in the beginning of a period of full liberalization, recording an increase of 51% to 100% in the proportion of foreign investment in the personal insurance business. The foreign insurance industry has been in existing for more than 100 years. When foreign companies enter the Chinese market, it provides a good opportunity for domestic companies to learn and compete in business philosophy, business model, product technology, service mode, and management skills. The opening up of the financial industry is an important part of China's opening up strategy. It is not only for the need of the financial industry's own development, but also for the inherent requirement of high-quality national economic development. In recent years, China's financial industry granted market access to foreign financial institutions through the open-up policies. Many restrictions have been lifted, such as restrictions on foreign ownership in the field of banking, security, future, and fund management, and the restrictions on the qualification of shareholders, such as capital size and the operating years. The national treatment in areas of corporate credit, credit rating, payment and liquidation, actively promoting the international integration of accounting, taxation, and trading system has also been granted to foreign investors. To prevent trade protectionism, the rise of unilateralism, and the uncertainty of global economy, China, as the world's second largest economy and the largest trading country, has made it clear that a new round of opening up the service industry, especially in the financial industry, is coming, demonstrating China's continuous determination to open up to the outside world. Thank you.